All right. Welcome back, everybody, to another episode of the Real Estate Investing Club. It is still Wednesday. I know the last episode I said it was Wednesday, but we're doing 2 episodes today. So it's still Wednesday. It's still hot here in Seattle. I hope you guys are surviving. Today's going to be a good episode. We got Luis Santiago with us, who is the Vice President of Growth and Development over there at Home 365. They are a property management company with over 4,000 doors under management across 11 states. So they got the experience. I'm sure Luis has some good wisdom to impart on us today. So Luis, thank you very much for hopping on the show.
Yeah, thanks for having me.
Absolutely. I told you right before we got on here, we like stories. So take us to the beginning of your real estate story. How'd you get started in real estate?
Yeah, so actually my first kind of start in real estate actually happened a little bit by mistake. So I was actually working for a Fortune 100 company in sales, managing a sales team and traveling, about 5 days a week. And as long as I was close to an airport, I was pretty much able to work from anywhere. And where I actually live currently in Lancaster, Pennsylvania, it's not as centrally located as some other places. So at that time, I really enjoyed spending a lot of time in Florida. And specifically Sarasota, and that's a really central kind of location between four kind of major hub airports. So I actually was able to do my job a little bit better from there than here, and so actually looked into purchasing a second home there, just to kind of spend kind of do a little bit an early version of the snowbird thing, and without even ever really thinking about looking at this property as an investment. I just looked at it more as, hey, if I'm not there, I might as well rent the thing out. And I started getting into kind of the short-term rental space, and eventually saw the uptick in the real estate market and end up selling it for a pretty good exit relatively quickly. And that was kind of like my first real experience. I then heard of this this new prop tech company that was launching in Lancaster, Pennsylvania, and we never really had any companies like that before. And the more that I learned about it, I ended up going in and meeting with one of the founders, and after that meeting, knew that it was something that I wanted to do. So I would have considered myself having no experience in real estate, because I wouldn't have considered that first kind of short-term rental experience as being a real estate investor. It was more out of necessity and out of that point.
You'd be surprised how many people come on this show and they got into real estate by happenstance, just kind of like you did. Like they just bought a house and then like, shit, now what am I going to do? I guess I'll rent it, because they weren't living it at the time. So yeah, I mean, happenstance is the second thing. Just kind of stumbling into investing is a common theme, I feel like, across the episodes.
Yeah, and that was really and I was really blessed in that the founder at that point was really passionate about his employees getting experience in real estate. Hey, look, it was okay that I didn't really have a strong real estate background. I really came more with like the strong sales background, kind of building out sales teams, and that's what they were looking to do. But it was really important to him that not only do I learn everything that I can about real estate to kind of be that consultant to our customers, but that I also had my own experiences, so that when I am speaking to an investor, especially in the property management space. I mean, look, you hire a property manager to handle problems, right? So if you're talking to me about your problems, especially in real estate, or when it comes to investments, if you're having a problem that's going to be a fiscal impact to you is extremely personal. It's extremely emotional. And there's a difference between, being able to understand logically where the person's coming from when you're having that conversation. And there's a big difference between having your own experiences and having that, having those wounds, that pain, being able to empathize because of your own history with that. So it's really important to him that, that we got our own experiences in real estate. So I decided to dive right in. I mean, my first purchase a couple months after I started the company, and I purchased a duplex at that point, and and things. I bought it at a really great price and kind of had like instant equity, and the place is rent out. I was expecting it to rent out for $1,000 a unit, and ended up renting out for $1,500 a unit, and I just thought,
wow, that's a good surprise.
Yeah, it's a great surprise, and I was like, oh man, I knocked it out of the park. This is
I am a pro. Everybody do what I do.
Yeah, and then like, and then of course, 5 months in, my one tenant stops paying rent, and the next month, the next tenant stops paying rent. I don't know if they talk to each other or what this was, but and then I realized, and then I needed a new roof, and then then there was a leak, and then there was a frozen pipe in the basement, and it's like, and then all of a sudden, everything went from from a grand slam to a strikeout, and that was kind of like my first experience, and I just took my step with my third property at the same time all this started happening. So it was it's looking back, it's easy to kind of laugh on it, and kind of that experience is invaluable. So you're almost happy that that happened to you. But it's without that experience, once again, I could understand and say, hey, listen, Gabe, I get it. You're having tough troubles right now, but it's different with having that experience, me being able to say, hey, Gabe, I've been there, man. And the customers can really feel that too. You can really feel when you're talking to somebody who's lived it, it's different than somebody who just logically understands it.
Yeah. Yeah. Being kicked in the teeth in real estate is definitely a rite of passage. You gotta have those properties that really did not go the way you expected. Because then you are a little bit more conservative when you're doing your underwriting. You understand that things can definitely shit can hit the fan and in very unexpected ways. So you got to bake that into your underwriting when you first get into the property, especially in larger commercial properties, obviously, but even in single family you really want to be conservative when it comes to what you are expecting the property to do. So you did those first couple of investments. It sounds like it started to go well, then it went south. It sounds like you were able to exit one at a pretty penny. Have you expanded from there, or what were the first or the next steps that you took in your investing journey?
Have, yeah. So I actually, kind of went 0 to 100 in the span of about a 6 month period. So I went from having, having no doors to having 10 within 6 months. That's when I really kind of decided to scale back a little bit. What I was really doing was, trying to learn and experience some of like some of the strategies kind of in real estate of basically how to burr a property, or how to leverage one property into financing for another, and using short term or hard money lenders. And so it was more so of an experience for me, and what my goal was to kind of get to 10 doors as soon as possible. And kind of when I hit that goal was when I realized, okay, this is also where you end up learning a new lesson. Right now, it's also not only about how to do it, how to build, how to get there, but now it's like, okay, well, now that I have this, now what does this mean? Right now, it's not just one door, now it's 10. And I know guys out there have hundreds of doors. We work with, I've worked with some investors that have thousands of doors, and that's just a whole nother level. But it's just kind of going from um, you know, building a real estate portfolio to now actually owning one and managing one, and not only managing one, but also understanding the difference between self-management, between getting a property manager, between managing the management company, and understanding that pretty much no matter which direction you choose, you're always going to have some sort of stake in the game, you're always going to play some sort of role. And I was more so trying to decide, or trying to figure out exactly which role kind of fit my lifestyle, and which role kind of fit my even just my interest, if I'm being honest.
Yeah. Yeah. When people just get started out, I mean, I think pretty much everybody, we start out and we have our hands in all of the different buckets. We are doing all the roles, trying to get everything done ourselves. But you quickly learn, especially property management, you can't do it all. And you need a team to help you out. And I think property management is the thing. I don't even know if I would suggest somebody start by managing their own property. It's nice to understand things, but you don't really need to understand it that well, because it's pretty self-explanatory. When a toilet breaks, you understand how to fix it. You've lived in a house. And so I would almost suggest somebody bypass the self-management, especially in small rentals, and get a property manager. So let's talk about that. Home 365, you guys do property management. That's your bread and butter. That's what your company's about. It is the biggest step that somebody can take in their career, in their real estate investing journey, is deciding which property management company to kind of hitch their wagon to, and which company that they are going to be trusting to manage their portfolio in a good way, in a efficient and fiscally responsible way. So what are the biggest tips that you would give, listeners out there when it comes to making that decision? Like what should they be looking for when they identify, different property managers to work with? How should they make that decision?
Yeah, so great question. One thing that I always come back to when it comes to choosing a property manager, even choosing if you're going to trust your units with a property management company, is understanding that property management companies truly aren't managing properties. They're managing your assets, they're managing wealth. They're no different than, a stockbroker or a trusted investment advisor. The only difference is the asset class that they're managing at that point is physical real estate, right? So, also, I know that it's very easy to, a lot of people that get into investing, or, at least in the beginning, are because they read Rich Dad Poor Dad, or they've seen something on Bigger Pockets or a podcast like the Real Estate Investment Club, and have decided, hey, look, I'm trying to be financially free. I'm trying to, create as much cash flow as I can, so I can, I can escape the day-to-day grind of my job. And it's very easy to get focused so much more on the month-to-month free cash flow rather than the overall asset class or the overall growth overall. And what happens is we start stepping over dollars to pick up pennies. And we look at, whether it's, depending on your market, property management can range from, 8% to, in some as high as 11, 12, 13%. And giving up that percentage of a monthly free cash flow when you're trying to get yourself, financially free in a sense, right, is a hard pill to swallow. But what you don't realize is that, look, that property management company may be taking 10%. And yes, there's a lot of things you probably can do yourself, but one, your time is extremely expensive as well and has some sort of value. And the second thing is that inefficiencies by learning and taking those bumps and bruises, on your own, rather than leveraging the experience of somebody that's been doing this for a while, can be extremely costly and or very easy to oversee. For example, if you missed, if for just lack of, or just inexperience, your property sits vacant for one extra month because of maybe you're not advertising it correctly, or the pictures weren't, just as crisp, or whatever the reason being a new investor, right there, you've lost pretty much 8% of your total overall income for the year anyway. So it's, one little small mistake can really be a whole lot more costly. And then you're adding your time and just your experience overall, can really have a larger impact than what anything a property management company is going to actually cost you. And, and one of the other, bigger costs that I think a lot of people forget is that, the only difference between a real estate investor owning one property and owning 1,000 units or 1,000 doors is a bad experience along the way. When you fall off that horse at some point, that's where it's really hard to get back on and kind of get to that next property. So if choosing the right property manager, or choosing somebody that's going to, help guide you and be that support system for you along the way, is the difference between you having a bad experience at 7 doors and stopping there and never growing past that, or you expanding to 20, 25, 35 doors. The true cost of that property management company is dwarfed, over what your overall actual, returns are going to be just by staying in the game.
Yeah, for sure. Going back to my original question, though, we were asking what makes a good property management company. What should people be looking for when they identify a property management company? Because there's tons of them out there, and it's difficult to make that decision. Like, which one should I be going with? So, in your opinion, what are the traits of a good property management company from the investor's perspective?
Well, obviously, I may have a sort of a biased opinion, but let's talk about some kind of bullet points that apply to all property management companies first. And the first thing is finding somebody that cares. Finding somebody who is truly empathetic, understands the position that you're in. That's why I really like, kind of going back to one of our founders really forcing us to get into real estate ourselves is, finding other property management companies that are real estate investors themselves, so that they can have that kind of empathetic, connection with you. One is extremely important. Two is that also understanding that, we're managing assets here, and what you want is the best return out of that asset. And that really does mean that, it's not really all about you as the investor. Finding a property management company that identifies that the tenant is actually the real customer. The tenant is actually where the income is truly coming from. To get the best returns, we need to give the tenant the best experience. That's where, sometimes you get put in these difficult positions where it's really easy to want to maybe defer some maintenance, or do something that's going to be able to, once again, keep that cash coming in. But having a property manager that's willing to push back on you and say, hey, listen, Gabe, I know that this might be a little tough for you, but just imagine if this tenant leaves because of this one maintenance issue. Really being able to coach you and be able to not just be a yes man, but be more of an advisor. I think is a huge characteristic that I think you should be looking for when identifying a good property management company.
Yeah, for sure. I like that you said the property management company should understand that you are not the customer, the tenant is the customer, because that is 100% true. You are the investor. You're more like the board of directors or something like that. The actual customer, the person whose service you're giving your rental to, the person who's actually living at your property. That's the one that they should be caring about. Obviously, they should care about you as well because you are the investor, but they should really be focusing on the tenant themselves. Are there any big, hurdles that you see investors running into when they hire a property management company? Is there, like, they don't have the proper meeting cadence set up, or what are the big issues that you see people running into when they decide to onboard a property management company?
Yeah, I think usually one of the biggest hurdles is just disorganization when bringing on a new property management company. Look, there's a lot that goes into it, whether it's rent rolls, and whether it's accurate tenant contact information, whether it's accurate record keeping of who's paid rent, who hasn't paid rent, whether it's rental licensure, just making sure that they're up to date with certain inspections, depending on whatever city, township, or borough that your rental property's in. It's just making sure that you kind of have those ducks in a row. But also, the good thing is a good property management company is going to be able to help kind of coach you through that. It's going to be able to help fix some of those areas. So what I would say is, sometimes people get discouraged and they kind of start to communicate a little bit less, or drag their feet when it comes to trying to get those records in order, or admitting that maybe they don't have those. What I would say is, look, when the day that you decide to go with a property management company, understand it's a true partnership. Be 100% transparent. We understand not everybody's perfect. Not everybody has everything, all their ducks in a row. And we also understand that, if you weren't having problems or you weren't having issues, we wouldn't be on the phone anyway. If you had a property, brand new build property with a tenant that's paying religiously, you wouldn't be calling me to help manage that property. If your previous property manager wasn't messing something up, you wouldn't be on the phone looking for a new one. When things are good, things are good, and nobody's looking for change. When you're looking for change, you're on the phone with us. We know that you've got problems. Be transparent. Let us know what those problems are, so that we can help fix it, rather than waiting for it to become a dumpster fire.
Yeah. Yeah. I feel like that's good advice. Just from the investor's perspective, to understand that the property manager is on your team. They are part of the team. And you really need to, like any good team works with transparency, with communication, with, everybody on the same page. And so you got to really be open and honest with your property manager, or else they, just won't work well. I think the biggest thing that I learned when hiring property managers is really to set up a meeting cadence with them that works and that people can stick to. Because, like you said, it's not hire and then you can forget about it. There is no real passive income in real estate. People like to say it's passive, but unless you're investing in a JV, or in a syndication, and you aren't a limited or a general partner at all, you're not doing any active income, you don't own the property, then it's not passive. You have to have your hand in the game. You have to be out there. You have to be meeting with your property manager, manage the manager to make sure that everything's going well. So I think the best lesson that I learned is just to have that meeting set up with your property manager every single week or month, whatever you want to do, just to make sure that everybody's on the same page and you understand what's happening with your property. So that leads us actually to the quick question round. I looked at the clock. It looks like we have run it down. So it's time to jump into the quick question round. Are you ready?
Ready?
Let's do it. Starts with books or any form of education. Give me two recommendations, one for general life wisdom, one for real estate.
I would say general life wisdom. Um, there's a book called All In by actually one of our clients. And let's see, real estate. Yeah, I know that this is kind of beaten into the ground, but I'm going to go with Rich Dad Poor Dad.
No, that's all good. I think you're, I mean, that's been said many times, but we're on a streak here. I think you're number 4 in a row that said Rich Dad Poor Dad, which just goes to show it's a good book. If you guys, for anybody who's new, who's just thinking about investing in real estate, definitely pick that up. It's a great book. All right, next question is for your younger self. So let's go back to the Lewis who had no experience in real estate. He was just buying that first vacation home, or was it a second home that you had down in Florida? Go back to him, look him in the eye, give him two or one piece of advice moving forward.
Just start.
Just start. All right, that's a good piece of advice, and that has also been echoed across many episodes, which just goes to show you guys are out there, you haven't gotten your feet into the game, you aren't out there, you're not active, and you're just waiting, you're getting more information, you're just waiting for the right moment. Now is that moment. Everybody wishes they got started earlier, so get out there, get in the game, buy a property. You will not regret it. All right, next question is about the US. It's a big place, a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
Scranton, Pennsylvania.
Scranton, Pennsylvania. Right on. Um, is that Scranton, Pennsylvania? That's where the office is
It is.
located, right? Okay, cool. I didn't know if that was a real city or if that was a made up city, but Scranton, Pennsylvania, real city.
Real city with a strong investment market, strong rental market. There's good deals to be had. There's very easy forced appreciation. I mean, I've done very well in Scranton.
Yeah, yeah. Dwight Schrute, he's already invested there, so you're along good company. Um, leads us to the next question. This is about finding deals. It all starts with the deal, with finding the deal on the market through letters or whatever, however you find deals. What is your favorite way to find good deals?
My favorite way to find good deals is to build relationships with really good investment agents. To the point where, look, a lot of investment agents like to move properties, they like to move them quick. So if you can build a relationship with them, knowing that you're not going to drag your feet, you're going to pull the trigger if the deal's right for your buy box, they're going to come to, you're going to be the first one that they call for those deals to just get a deal done. So my best way to find good deals is to build that rapport with them, that they know that when I'm going to buy quick, so that when they're just trying to unload something, I'm the first call that they make.
Yep, relationships. Yeah, that is the name of the game in all of business, but I feel like in real estate specifically, because it starts with buying something, buying the transaction. So building those relationships is a great way to find good deals. Leads us to the second to last question. This is about your biggest lesson learned so far in real estate. Not all deals are home runs. Sometimes we have to learn a lesson in those deals that can go bad. So give me the deal and then tell me what was the lesson you learned from it.
Honestly, I would say that one of the hardest hitting deals that I've had was my first one. Luckily, it took enough time for it to go sour, that I was able to purchase a few more, and it wasn't discouraging. But the biggest lesson that I've learned is, make sure when it comes to the deal's not always about cash flow. Don't always look about those cash flow returns. I think that one of the most important parts about a good deal is making sure that you're making your money at the closing table and that there's enough equity in the property to give you a safety net. So if things go bad and you don't get the returns you're expecting, you don't get the cash flow you're expecting, you have some maintenance issues, worst case scenario, you can pull that ripcord, you can get out of it, you can sell, you can unload it. and making sure you have enough equity to do that, and or have enough equity to go back to the bank and borrow some more money to buy yourself some runway. So the biggest lesson that I learned is, especially when you're newer, the safety net is not more cash flow. The safety net is more equity.
Yep, that is really good advice. And I think you might have been the first person to say that, but it's we're almost episode 400 here. And I feel like that's a good thing that somebody else should have caught on to, but I feel like it's good advice. So that's a good lesson learned. Leads us to the last question. This is for the listeners. You've given us a lot of things to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
Best way would be email or text message. So I'm not sure if anyone's ever thrown their personal cell phone out on here, but I'm about to do it. So email would be Lewis, Luis, S again, at home365.co. No M, just .co. And phone number, text message, 717-892-4005. Shoot me a text.
There you go. You heard it here. I will put those in the show notes. So if you guys want to reach out to Lewis, just click a little more in the description. It'll pull down that full description. And in there, you can find Lewis's links. All right, man. That wraps it up. Thank you very much for hopping on the show.
Thank you. Thanks for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.